credit unions and community banks understand that it's a must-have because otherwise they'll be disintermediated by these fintechs.
Hi, I'm Adam West. I'm industry news editor for badcredit.org. Today we are here with Yaacov Martin, the co-founder and CEO at Jifiti. We're going to be talking about small dollar lending and how credit unions are becoming more active in this space. So first of all, thank you for joining us today, Yaacov.
My pleasure. Thank you for having me.
So I want to just kind of jump right into kind of the trend to start out. So we're noticing, we actually saw a story earlier this week about how credit unions are jumping more into this space, especially from like an employee sponsorship perspective. I know that's something that you don't do quite as much on your side. So we'll kind of stay out of the employee side of the conversation, but I still think there's a lot of interest in this segment and how it might be able to be used for acquisition, cross sell, a lot of these aspects that credit union leaders are caring much about these days. So first, I just want to start with a little bit of background on Jifiti itself and what you do in terms of this conversation.
Sure. I always like to start with what Jifiti doesn't do. We do not lend. We are not a balance sheet lender. We are a pure technology play, and our goal is to enable and empower both banks, community banks, and credit unions to offer the right type of financial product to the right customer at the right time. And essentially, what we do throughout that is we create and deliver the journeys that are needed, a lot of the background work that is needed for seamless and digital real-time underwriting and decisioning. And then, of course, we are very much involved in the disbursement part and in many areas that take place post transaction. So whether that is servicing the loan or creating, for example, a self-service portal for customers who have taken various types of loans or other credit facilities. And all of this, of course, is white labeled in order to preserve the identity and the brand of the lender, community bank, or credit union behind this.
Great. Yeah, I appreciate that overview to start out. Let's get into the trend. So, what dynamics have you seen in the marketplace that are driving more credit unions to offer these types of small dollar loans? Are you seeing anything that's kind of an impetus behind this, I guess?
So, great question. And I like this because we've actually seen really tremendous movement, I think, over the last, I would say, couple of years. And in order to give a little bit of context, I'm really going to try to zoom out and try to explain what we see going on in the industry as a whole. If once upon a time, banks and credit unions really had, I don't want to say a monopoly, but really had a stronghold on or over financial products that are being offered to the publics. We all understand that many fintechs have arrived at the scene over the last, I would say, decade or so. Some of them very, very strong, especially with their, of course, digital presence and their ability to engage and show up pretty much at any point through the digital mediums. And I think to some degree that has, over the last few years, gotten many of the community banks and credit unions whose mandate is really to serve the community to say, hey, one moment, we are being very much interrupted, maybe, or even disrupted by these digital fintechs. The issue is that their actual financial products and solutions aren't always as competitive as community banks and credit unions. And therefore, in order to basically offer a similar experience and show up at the point of need, we're seeing community banks and credit unions looking to really partner with strong digital enablers in order to offer their products when and where their customers need them. And we're really seeing this as almost not a nice to have, but I think many of the credit unions and community banks understand that it's a must have because otherwise they'll be disintermediated by these fintechs and other digital players.
I think one thing that I've been thinking about with this topic is that, this gap exists because big banks don't necessarily see the value in small dollar lending. And so it's kind of creating this gap where fintechs and credit unions and community banks can kind of step into it. But from a credit union and community bank perspective, do you think that they're more interested in this from like an actual profitability standpoint, or do you think it's more about customer acquisition and lifetime value?
Okay. Again, excellent. This really steps right into some of the trends that we're seeing. So I would say that traditionally, credit unions and community banks weren't in this in order to lose money on acquiring customers, meaning they were offering products that were made sense for the customer, were profitable to them, and sustainable to them as well. And what we are seeing is that there actually is a sort of middle ground, or I would say even gap, in terms of the products that are being offered. We all are very, very familiar with many types of buy now, pay later products that are usually for smaller dollar spend offered by digital fintechs. On the other hand, we all understand that if you're going into your bank or credit union in order to really sign on a much larger type of loan, that also may not be the area in which community banks and credit unions are feeling the pressure. It's really somewhere there in the middle. We would say it's somewhere around 800 or $1,000 up to about $5,000, where you can often have customers who are either as a private person experiencing unexpected expenditure, expenses, a car may break down, or a small remodeling where the fintechs themselves aren't necessarily offering the right type of solution or offering a solution that is quite expensive. But on the other hand, traditionally, that was an area where the origination cost for credit unions and community banks was still significant and questionable as to whether or not they can make that work from them from a profitability standpoint. And I think what we're seeing and what we're doing with many of our partners is providing the type of digital tools that make that both acquisition but also origination cost, or bring that origination cost way down, and allow for the community banks and the credit unions to show up at those times of need. And what we're finding is that in addition to creating profitability in this domain, it is also creating a very, I would say, valuable engagement and relationship with their customers. If you can show up for the customer at the point of need, at that time, with a seamless experience at a price rate that is sensible both to the customer but profitable and sustainable to the bank, then you've really been able to take a stake in that invested relationship. And that's really where we find ourselves mostly with community banks and credit unions. There are other products we can speak about later on that are worthwhile as well. But to answer your question, and sorry about the roundabout here, that is really the area where we're finding the value in putting our technology together with the balance sheet and mandate of credit unions and community banks.
Great. I think one thing that I was thinking about too, like this, I guess this just makes it a little bit extra valuable for credit unions, is that, American credit unions are kind of going through a bit of an age crisis. The average age of their members are like in their 50s in most cases. And so, that's usually not the kind of clientele that's looking for small dollar loans. And so, do you see this as a way for credit unions to actually get younger as well?
Yes, absolutely. You're hitting it on the head. The credit unions and community banks can no longer rely only on the, I would say, older demographic that they were able to engage with at a much earlier time in their life and in their life cycle. And as you said before, the needs are very, very different. Um, and I mentioned before, this digital age where digital fintechs are really disintermediating. But the truth of the matter is that we're finding that not only from fintechs, but even from national, very, very large banks who have invested incredibly in their digital presence and able to really serve up the goods, so to speak, to anyone and anywhere across the country. And then the question becomes, okay, so what is the value of a community bank and a local credit union? And we still find that there is inherent value and there is ability to build a long lasting relationship with them, but they need to be able to at least show up as an alternative to the younger population in the digital sphere. And that's why this digital presence and the ability to provide a real time experience where the outcome is actually a solution to whatever it is that they need at that point in time is absolutely critical, not only for the survival, but in order for community banks and credit unions to continue to flourish and show up as, I would say, the partner of choice, so to speak, to their communities.
Yeah. We talked a little bit earlier about, lifetime customer value. Are there specific products and services that credit unions and community banks offer that are the most likely next step for that relationship after a small dollar loan?
Yeah. Okay. So this takes me actually not only into consumer lending, but also small and medium business lending. And a lot of what we're finding, and this is kind of has always been our foundation for the way that we build out our platform is to really be able to offer the right type of financial product to the right customer at the right time or at the point of need. Um, and while we are not huge fans of loss leaders, and therefore even the smaller dollar loan or that domain that I described before, somewhere between 800, 1,000 up to $5,000 products need to be profitable. But really, the next step is to be able to evolve together with that customer and serve them both as entrepreneurs, as small business owners, and really guide them through that process. And I think that what we're able to do, instead of credit unions and community banks looking at the digital sphere as an enemy, I think what we're really working hard with them on is harnessing those capabilities in order to really provide local alternatives that are able to compete with many of those other, like I said, nationwide or sometimes even global brands that are coming out there with various types of financial solutions that more often than not turn out to be, I would say, more expensive to the customer than what their local credit union or community bank is able to offer.
I'm not sure how much Jifiti gets involved with underwriting because I know you said you're not directly a lender, but maybe you have some visibility on this. I'm curious, like how much alternative underwriting is or like alternative data is kind of coming into the picture for some of these borrowers because most of the people seeking the small dollar loans, I would imagine, have a higher likelihood of being like thin file borrowers.
Yeah, so the answer is more and more. And you're right, we are not underwriters ourselves. However, today we are engaged pretty much in every activity that goes together with underwriting other than the model itself, meaning we are able to implement various types of risk appetites and various type of models that our partners are looking to underwrite. And what we're able to do is we're able through our orchestration layer to really facilitate that type of decisioning and underwriting. And that includes, like you said, many alternative data sources that come into play. And, in the US, at least with consumer, it's pretty straightforward. Yes, everybody claims to have their secret sauce, but we all know that FICO plays a very, very significant role in any type of decisioning and underwriting. But when it comes to small and medium businesses, it is far more complex. There isn't the same type of standard, and therefore there's a critical need in pulling in data from various types of data sources. And that is precisely what we do. We build that together with our partners in order to be able to provide what is needed for a responsible decisioning and then ultimately underwriting process. And like you said, in order to start a relationship, very often there's a need to go out there and become creative in terms of where you're pulling data from in order to render a credit decision.
I know small dollar loans have, specific regulation around them, like PAL guidance by the NCUA, for example. Like, how do credit unions ensure compliance while still, being able to be innovative?
Yeah, that is, I think, today become the name of the game. And while we have many, many, many players who are essentially confining themselves to areas where it is not strictly defined from a legal framework or compliance framework as a loan and rather a split payment or payment method and so on and so forth, I think our specialty is working specifically with highly regulated institutions such as banks and credit unions in delivering regulated products and nevertheless being able to do that with the efficiency and the seamlessness of some of these other players. Compliance does not mean necessarily that you're shackled and you're not able to offer these type of products. What it means is that you have to be diligent in terms of taking the customer through those steps and those stages. And it could very well be that there are certain types of applications that will not get funded. And that's okay because, again, from a sustainability standpoint, that is healthier. And we've seen this, thankfully, I think today we are in a much better place in terms of the industry as a whole. But until a few years ago, we were seeing various practices that, at a certain point in time gave those companies these unbelievable valuations and volumes, but they all came to an end. So we're seeing customers also prefer to receive these type of solutions or financial solutions from credible and regulated institutions when they have a choice between going to their local community bank or credit union as opposed to a brand that they don't have any relationship with. As long as the experience can be similar and the timing is not very different in terms of how long it would take them in order to receive a credit decision, they will prefer, the vast majority will prefer to go to that type of institution or brand that they trust, they know that are compliant, and therefore offering responsible lending only.
I think we just have time for one more. If you are a banking leader watching this interview right now, like what's one thing that you would tell them to start thinking about in terms of like this opportunity?
Okay, so the first thing that I would say is you cannot build your roadmap based on what you've been doing for the last 50 years. The arena has changed, and we're seeing many community banks and credit unions completely understand the world that they're playing in today. And we're seeing these shifts also take place in at a rapid rate, I would say, that we've never seen before. Some of this has to do with some of the technological capabilities behind the scenes, the ability to underwrite, the ability to process data, and so on and so forth. But what you really have to do is you have to, even if you view yourself as a small player, the digital arena is not only a threat, it is a huge opportunity for you as well. And it doesn't mean that you have to build all of these things out yourself. And today, it doesn't mean that you have to spend millions and millions of dollars on user experiences and digital presence. That is not the case anymore. And it shouldn't be expected to be so. And therefore, I would say number one, do not build your roadmap based on history. Build it based on what you're seeing all around you. Number two is there's absolutely nothing that restricts you from providing a similar or even better experience than some of the huge national brands out there or digital fintechs. Do not allow yourself to soar in terms of your vision, and just make sure that you bring it down into actionable milestones and look for partners. Happy to be a partner, but we're not the only partner out there. Partner with technology firms that are offering that enablement so that you can serve your customers when, where they need it most.
I think that's all we had for today. Yakov, thanks for joining us in this conversation.
My pleasure.